You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I think my helmet's too tight, or maybe my head is just too big.
Oh, it looks like we've got an incoming transmission.
Remember guys, we're doing our big Black Friday sale this month. Check out the links in our bio for more information.
Roger that, Julie.
Okay, I'm starting to think we might be lost.
Maybe James could help us with directions.
I think he accidentally blasted himself out of the airlock.
Again?
Let's go get him. Man, I've been playing too much Starfield. This feels kind of real. I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
Good morning, everybody. Welcome back to another live stream. Thank you for being here and for this really pretty big week that we've got ahead of us. First of all, I just want to make a little bit of an announcement for my friends who are outside of the U.S. and within the U.S. This week is Thanksgiving week. And in the U.S., we celebrate that, of course. It's a time to spend some time with family and to be thankful and give thanks for all the awesome stuff that we've got going on in our world. It's a good time in the U.S. and also it is a bit of a quiet time in terms of markets because, of course, a lot of the U.S. traders are going to be off the desk, and it does tend to cause some slight quietness in markets for a few days. That will probably start to kick in about Wednesday or Thursday, which, of course, Thursday is Thanksgiving, and probably will pick back up once the new week starts. Now, Monday and Tuesday, I will be here. Wednesday through Friday, I won't be doing a live stream, but we will still have some videos prepped for you guys to watch on the channel. Shout out to everybody who's with me here live. Thank you for being here and happy Monday to you. Markets are back open. I'm still in this S&P trade. It's going on 20 days now that I've been in this trade, which is for me a very long duration for a swing trade. Usually my average trade duration is a few days, right? 1 to 4 or 5 days is pretty standard. But then you get the trades that just keep wanting to go. And let's check. Here's the pound CAD trade. Speaking of which, we've got another trade that is running hot. and it is getting close to time to trailing stops on pound CAD as well. So I've got two winners. Now, let me be very clear. I also took a loss this morning on US oil. So the win streak is over. My stop loss was hit on the kind of kickoff here to the week, with oil prices actually rising suddenly and sharply. So did get me stopped out there. So I took a loss on this oil idea that I had, and you win some, you lose some. So the thing here is, will this week be positive for risk assets? Again, we've seen this trend recently where the dollar has taken a lot of heat, and the question will be, is the dollar going to continue its downward fall here? If you watch my Sunday video, then you know I am still very bearish on the dollar, though I do think that it is possible we could see some sort of pullback. There is also the option of just continuing to kind of hug the lower end of this channel and continue down. At the end of the day, I think it's in a downward trend, and I think that that is likely continuing. So what does that tell us about risk? Well, it tells us that risk assets could perform well. So Nick, why the heck, almost said the HE double hockey sticks. We don't say that on stream. Why the heck are you short on oil? Well, take a look. Oil is in a nice downward trend as well, but here's something to think about, okay? The oil market, in my opinion, should see some decline for a couple of reasons. And usually it is supply and demand, okay? If we talk about supply really quick, a lot of the non-OPEC countries have actually increased their supply. They've increased production of oil. What does that cause price to do? So if supply is up, then of course that's going to be not so great for the oil market. But then what about demand? Well, economies around the world are also slowing, right? That seems to be kind of a trend, not necessarily massive, contraction of economies, but we're seeing slowdowns globally, right? We're seeing Europe and the US. We're seeing some of that really happen. And so if you look at oil and you look at the supply and the demand, both of them, in my opinion right now, lend towards further decline in oil. Now, of course, clearly I was early with this first attempt, but I will be watching oil for a possible secondary attempt to try and short this market. My idea was, as price came up to this area, I would get short, and unfortunately it broke through the 61.8. That was my point to cut the trade, and I took a loss of about $475 this morning. So, trying to stay transparent with this stuff. There are times where it's good, there are times where it's bad, but obviously you're going to win some, you're going to lose some. We're still in the S&P trade. That is, at the end of the day, a massive, massive trade. And, to be clear, I've got two S&P positions open. I've got the VOO, which is the same thing, S&P, Vanguard's S&P ETF, and then, of course, SPY, which is the Spider ETF Trust. So both of them working very well in my favor here. This has been my play for November, is to stay long S&P as much as possible. And fortunately, we've been able to trail that stop. And, Frank and I were discussing this on Friday. We're saying, what's the deal here? What are we going to do about this resistance point? And I've as I said to Frank, and as I've said to you guys on the streams consistently, as we approach this level, this is the 4,500 level on SPX 500, SPY 451. So again, we take a look at SPX 500. We're sitting at a level of resistance. And, some of you guys might be purely currency traders or gold traders, and you might be saying, Nick, can we just move on to gold and dollar? But let me illustrate something. The S&P 500, in my opinion, is the number one indicator of risk sentiment. Are markets risk adverse, or are they willing to get out there and take more risk? And if you're a currency trader or a gold trader, that speaks volumes to you as well. It's why it's one of my favorite things to trade. I love just kind of using the VIX and the S&P as my indicator for risk on, risk off sentiment. Right now, I think risk on is ruling the day. And the question here now will be decision point. Are we going to break out? And if so, risk on, I think, continues to prevail. And let me just let you in on a little secret, guys. If you're a student of seasonality, this week is one of the best weeks historically of the year. Thanksgiving week in the United States typically is a very positive week for stocks. And that, of course, could potentially help this S&P trade further. So I want to stay long this week if I can. If things start to really reverse, then, of course, I've got my trailing stop in place and I'll take profit on that. Okay, so let's go back to that dollar for a second. Again, if my thesis is risk on is kind of the trend right now, then we expect dollar to continue to decline. And don't be surprised if you're a dollar bull. You might say, well, Nick, it's at the bottom of this channel. It's due for a nice rally here. Well, yes, but you could have said that over here, and look what happened, right? Price just has hugged the bottom of this channel. This is why, in my opinion, you don't buy downward channels ever, right? The path of least resistance, the flow of this market is to the downside for DXY. Okay. So again, I don't think that this is a very high probability trade to try and buy the dollar for a bounce here, because that bounce could come. But what if it comes way over here and you're sitting there and you've taken this big drawdown trying to wait for the bounce, right? So I don't like to play the bounce. I don't like to play counter trend. I keep it really simple. I'm looking for, if you're a dollar bear, then yes, we wait for that bounce as a potential opportunity to get short. Again, that would be my way of approaching this. And that could mean gold buys, by the way, guys. I've kept that door open. I'm watching gold here as we go into this week. On the flip side, this is why I think you don't buy a downward channel. Momentum is to the downside. Fundamental factors, in my opinion, favor dollar continued decline. You have economic contraction here. Well, not contraction, but slowdown in the U.S., right? And potentially other currencies ready to take a turn. Here's the euro. Look at this. Structurally looks really, really strong to the upside. We should take a moment, guys, to take a quick look at the COT data before we push on to gold. And again, this is, of course, updated automatically each week inside of the EDGEFINDER. It pulls the COT data, pulls it in, and we take a closer look at it. Here's your net positioning. Remember, I make this point each and every time. Please do not overhype this section of the COT data. In my opinion, if you are more of an investor or a longer term swing trader, then this is the chart to pay attention to. But if you're more of a shorter term trader like myself, and I think most of us, the second one is way more important. Now, you can get this data here for free on our website if you head over to a1trading.com. But this second component is, of course, reserved for our supporters that purchase copies of our product. And by the way, let me just mention really quick, if you do not already have access to the EDGEFINDER and you've been watching, it's Black Friday week here at A1 Trading. Currently, with the Black Friday sale that we are offering, if you're with us here live, this is going to be the best discount that you can get all week. 45% off of the EDGEFINDER. If you've been watching the streams for a while, let me just take a quick point to make this to you guys. If you've been watching the streams for a while and you've been like, I love this tool, it's really cool, and I'd love to get my hands on a copy to use it each and every day on your own time, here's your chance. Get 45% off right now, guys. There is a huge Black Friday sale going on. We want to meet you. We want to speak with you to see if it's right for you. So please send us a direct message by clicking this link that's in the chat right now. Now, if you're watching at a later point, you can still get this 45% off too. Just message us on our website, head over to a1trading.com. And in the bottom right, there's a live chat support center where you can speak with someone on my staff about getting a copy of the tool. The reason we like people to speak with us about it is because we want to make sure it's right for you. We don't want people just buying our tool for any good reason. Obviously, we're a software business, so we want to sell copies, but we do like to meet each one of our people that are working with the software and make sure it's the right fit for them. We don't want people just buying our tool just because. We want to make sure it's right for you. So message us right now. Take advantage of that Black Friday sale before it ends. Again, this week is the best time of the entire year to get yourself a copy of the software. Start using it. And again, it is a one-time fee, guys, to get access to this tool. So you pay for it and you have access to it and all of the maintenance and work that we do on what's shown on the EDGEFINDER for the future. So don't miss out. Again, it is the best price of the year, and it's an early Christmas gift for traders out there. So there you go. With that said, let's take a closer look. This secondary table is where it really counts, guys, because this shows us the latest data, the latest changes on the EDGEFINDER. Change is what makes markets move up and down, right? Change matters. This stuff, sure, it's important. It shows you the net positioning. So in the last several months, they've had a long position open mostly on the dollar and gold. Obviously, this has really taken on some pressure, and we're watching the changes to see if this is going to change, right? Again, where something sits over here is like a long-term indicator. But if you want the more interactive, swing trader, day trader, potentially information that could be useful to you, that's where the second column comes into play. Take a look at the euro, for example. If you're somebody trading Euro USD or Euro Yen or Euro Pound, The latest week showed a big increase, 3% bullish shift in favor of the euro. That's a pretty big deal. Now, the US dollar had a 1.5%. That's actually pretty surprising to me. I would have thought that there was more bearishness coming in for the dollar. But this is, we can always take a look at these charts down below. These charts will give you a nice over time look. So yes, you had a little bit of a tick up in the dollar in terms of COT bullishness. But, you got to take it with a grain of salt because we look week to week to give us that kind of longer term perspective. In terms of things that they sold, really curious, the NASDAQ, they sold pretty aggressively last week, possibly some profit taking as the S&P and NASDAQ rose pretty hard. But before we get too bearish on indices, I would say that this is kind of a wash because take a look. They also were pretty bullish, well, slightly bullish on S&P and, a little bearish on the Dow as well. So if anything, perhaps institutional traders are kind of thinking that the S&P could be due for a little bit of a pullback. If my chart would load. Yeah, perhaps they think that there's a pretty good chance we see a pullback. That's probably a reasonable thing. But 1 week's data is not always the most important thing. So I'm going to still hold unless we see some significant reversal. By the way, for the gold traders out there, institutional money seems a little bit bearish this past filing. And oil, this actually, I liked to see this, right? We saw oil see some selling pressure from institutional money. But keep a close eye if you're watching, and feel free, guys. I'm going to move on from the COT data here for a second. Feel free to screenshot the page or pause the video, whatever you'd like to do. And remember, if you ever want to come back and check on this on your own time, get yourself a copy for that Black Friday sale discount. The link to send us a direct message for that is in the chat right here. Send us a DM. Let us know you'd like to get a discounted Black Friday copy of the EDGEFINDER, and we'll hook you up, get you that copy in your own hands so you can take it on your own time. So, I guess as I approach into this week, seasonally, this is a good week for indices. In terms of, you take a look at the euro, I think that if that dollar continues to weaken, the euro looks really strong. I mean, this looks like a really strong, pretty resounding reversal. And look at the daily candle here. We're already starting out green. We hit targets in terms of where I thought price could go in the short term. And this is why, I've always been a fan of trailing stops. For the last several years in my trading strategy. I love trailing stops because the second you sometimes think something has hit a target, you think it's hit too extended and it's due for reversal. To me, markets are very, very, they're not that predictable, right? It's not that easy to predict where this thing is going to pivot and stop and start and keep going, right? I find that to be very difficult. So instead, I think the trend is now up. And so if I was long, I wish I was, I'm not long in the euro, but if I was long, let's say I caught this pullback and it's running for me, I just trail a stop, because if it keeps going, again, I want to be along for the ride on some of these super trends that are rare in the currency market, but when they happen, they can be game changing, right? If you shorted the euro and rode this thing down patiently and diligently with a trailing stop, it can be a big winner. Now, of course, some people like to use partials. Some people like to just take profits and look for re-entries. Doesn't really matter. It matters what your strategy is, what you've back tested, so on and so forth. But to me, the path of least resistance for the euro at this time is still to the upside, with that dollar looking very weak. And even as we kick off the stream here today, look at that dollar, red candle after red candle, and starting to erase what was a really strong upward trend. Guys, we're going to take a quick break, and then we're going to bring in Frank and Ivan to go over latest setups in the markets for a few minutes. And we'll be right back with them just after this. Check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free EDGEFINDER, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
All right, guys, and we are back with my fellow A1 trading team leaders. We got Frank and Ivan. What's going on, guys?
Hey, how's it going? Going good.
Ivan, you're looking snazzy this morning. I feel underdressed suddenly.
There's a joke in the VIP group though, but yeah, I've not been serious lately, so now I'm very serious.
Now you're really getting serious, and
Now
what a
you're
great week
serious.
to get serious. We've got Thanksgiving week, which I was looking at this morning. Did you guys know seasonally that this is one of the historically best weeks for seasonality in risk assets? Typically, Thanksgiving week is really strong for the S&P. It's really strong for the Nasdaq. And I'm curious to see what you guys think. I mean, in some ways it's a quiet week, right? Because U.S. traders will be kind of off the desk starting Wednesday, Thursday, Friday should be pretty quiet in terms of U.S. participation. But then again, seasonally, it's a pretty strong week. Part of me wonders if maybe it's all the U.S. people going home and watching football and they're just in a sportsy mindset, so they all start buying stocks. I don't know if maybe that's got something to do with it, but I don't know. Ivan, what are you thinking? Have you noticed that trend before, the Thanksgiving week seasonality? Have you heard of that before?
100%. And what I think it is about that somebody wants to pay for the Thanksgiving dinner, and they need the money, so they
Yeah.
pump it up so they can comfortably pay for the turkey.
Yeah, maybe those big hedge funds, they have like a huge company party, and in order to pay for it, they're like, hey, let's give that thing a little bit of a bump so we can pay for the big Thanksgiving feast at the office. So I don't know, but it's an interesting anomaly, and seasonality it's a real thing. November has been a really good point about that. We've seen a really strong month for risk on assets. Frank, what do you think? You and I was talking about you just before about our S&P concept with, prices at resistance. What do you need to see in order to stay in your S&P trade? I know you've got the same trade on as I do. What are you looking for this week on S&P?
Break in 45.25 is where the highs were established, and then we saw a pullback, and now we're just kind of in this consolidation zone. Last week I was not very bullish just because of how quickly we've run up, and if price can break this level, then it will look more promising on a technical scale. But I still am very hesitant on this on, I guess, risk on assets overall. I know we're going into a good week. We have PMI data too coming out. So it could add to the overall confidence in declining inflation and things like that. But I think if we continue this trend, if this is just a decision zone and we break higher, then I don't really see any reason to be bearish. Just right now, I'm a little hesitant, just
Sure.
because we gotta see at least something here. Price looks like it's going up higher, and then it just comes back down. Um, well, I guess we're seeing higher lows, but still this constant, at least a double top here. If we can't break that, then resistance is probably too strong. It's just a battle between buyers and sellers right now. But I think what we got to see is a break, and that's what I'll be looking for. And then that's what we'll go into AU and EU trades on that as well.
Yeah, and I was going to ask, while we're on the topics of, of course, risk sentiment, another what seems to be big winner here as we kick off this week is, as I mentioned, the euro. Ivan, do you have a thought process on the euro? Is this thing getting overextended? And how, if somebody is on the sidelines, if they've been waiting on this? We talked about it last week. What are your thoughts on the euro at this level?
You know very much, Nick, that something is never overbought until it falls. This is going to continue
That's a fair point.
until there's 2 Thursdays in 1 week. So this one is just going to continue. This one is going to at least 110, 111. Are we going to see 120? I don't know. But this one is, as you can see, very aggressively higher. So this one is not going down. At least not until the next CPI.
I think that's fair. And you look at just the, here's something that's kind of interesting about on the fundamental side, Ivan. When you look at the ECB versus the Fed right now, there's something I think it's really worth pointing out. ECB versus Fed. Both of them are in a quantitative tightening mood, right? Or I'm sorry, they've been in this quantitative tightening mood. And when you look at the comparison, there's of course rate hikes. That's one side of it, but there's also of course their budgeting, right? Their balance sheet. And what we see here with the Fed is that they're actively reducing their balance sheet at a rapid pace. When you look at the ECB, they're not doing so much of that. Yes, they've raised rates, but they're not necessarily as aggressive in cutting their balance sheet. Now, the reason I point that out is when you take a look at that, that could be something that in some ways points towards some bullishness from the Fed. But I think it's very interesting to keep an eye open to that, to that point, which could perhaps the euro could continue to push higher. But if you get some flip on the ECB side, if they start to reduce their balance sheet at some point, that could also be really meaningful to the euro trade. I think right now the markets have been so dollar bullish that there's this whole unwind trade. And as you pointed out, what seems overbought could just be beginning. So I think it's really hard to try and fight this trend. Yes, you've kind of got some resistance looking left, but overall, I would generally agree that this secular shift in the dollar looks likely to continue to the downside for now. I mean, there's the euro. I was making this point earlier about this downward channel and how, some people might want to say, hey, you know what, maybe I'll play the dollar for a bounce here. And while I think that maybe it does work out, I think most likely, even if that is the case, if you think there's due for a bounce, what if it trails much lower before it gives you a bounce, right? The path of least resistance here, the momentum seems to be to the downside, especially in a week like this where you get that seasonal risk on drift. So I don't know. I think that's my bias on the dollar as we approach this week.
I had a bit of fun this morning. Your morning, at least my morning and my afternoon. But we had a meeting today. Great turnout, by the way. Great turnout. And the what do you call it? The takeaway from that meeting was when you don't know what you're doing and you think you know what you're doing, you don't have half the knowledge that you should have in order to be trading. So my point is there was some entries in there that I was like, have you ever tested this out? And the answer was no. I've never tested this trade setup out. So has anyone tested this kind of situation where euro is making new higher highs? Okay, so where do you want it to go? So my arrow is coming all the way down to 108.20. Okay, why? Because when euro becomes a bit too aggressive in the short term, it has a bit of a deeper pullback, and I don't want to be caught at 109.30 instead of I want to be caught at 108.20. So because I've done that many times before, and I'm going to do that many times in the future.
Sure. I also want to ask you guys about this concept as we get to the end of the year. And we've seen the dollar this year has kind of gone both directions. First half of the year, it was pretty bearish, right? You came into 2023 and you saw, a lot of optimism that the Fed was done. And then, of course, we had the narrative shift where it was like, nope, inflation is still a serious problem. And the dollar rallied. Now it seems like we're kind of leaning back into this again. And, you look at 2023 as a whole for the dollar, it's been all over the place, in terms of it was down, it was up, and here it goes, kind of coming back to normalcy. I think that it could kind of end out being a year where the dollar index just kind of stays flat as we approach into 2024. And I want to ask, I know there's a lot of people in the chat who are asking about gold here. In terms of gold, I want to go to Frank with this. Gold has had a nice little, it seemingly has found a new low, a new bottom here, and has been putting in these higher lows and higher highs. Do you think with all, if the Fed is done, then that could lend towards the dollar staying weak for a while and could potentially be bullish for gold? But Frank, what do you think about gold? Are you looking for any trades, or what are you waiting for to get you interested?
So after this head and shoulders pattern kind of finished off, it's now starting to look, I guess what you could say is mixed. But um, like you said, if the dollar is continuing to trail weaker price wise, it's inversely affected on gold. So gold will likely rise. And it's like the same news we see for inflation, PMI, CPI, whatever. If it comes in lower, that's good for gold. It's good for the indices. Gold is just it. It had that very extended run to the upside, and just needed to get some selling out of the way. Just to people are taking profits. Came down to this pretty important support zone in the 1930s. Bounced straight up from that. Um, overall trend, I think, is still to the upside. So I think it's just a matter of me taking action, because I've been I've been on the fence for all these risk on pairs. I've been on the fence for gold. I've just once I bought the S&P and saw how fast it ran up, it made me want to, I had to reconsider. Well, these targets were hit way sooner than I thought they would be. So
Sure.
things are still
And
looking
and Frank, I
upwards.
want to, yeah, I want to ask you. So you're thinking, longer term, the trend still looks good. I want to make this point though. Here's something to think about with gold, and I'm going to come back to Frank and then go to Ivan with this. So right now, the markets are kind of celebrating. Risk on is celebrating this idea that you have at least until the end of the year. I think that this trend is very confidently why I'm staying so bullish stocks. The economy has seen some meaningful and slowing, and inflation also seems to be normalizing. We're seeing some success in the inflation side. The question, I think the next battleground for bulls and bears is going to be the idea that, is the economy going to slow just enough to get us into kind of a healthy range and then stay there? Or is there a scenario in which, yes, the economy is slowing and people are celebrating, but what they don't realize is that all those rate hikes are then going to lead us into economic contraction? And in the case that you get economic contraction, things get really interesting really fast. In fact, a recessionary environment can be very bullish for gold. A deflationary environment can be very good for gold. Now, if you're wondering why that is, it's because that is when the printers go back on, and that is when inflation fears start to ramp up again. So I want to go back to you, Frank, real quick. Do you think, obviously none of us know what that economic data is going to end up being. None of us know if scenario 1 or scenario 2 is going to occur. But think about it from this perspective. It's possible that both scenarios are actually pretty good for gold. If we get scenario number 1 and we see the economy kind of slowing down, but not totally collapsing, and we get the soft landing, the dollar could be weak, and that weakness could attract higher prices for gold. And scenario number 2 could actually be more bullish for gold. If you get an environment where the economy, yes, it slows, but it slows way further than what people are thinking it will. And that's where we enter into potentially a deflationary environment. Now, of course, I'm speculating here wildly because none of us know what this economy is going to do. The economy is an inherently incredibly difficult thing to predict. But my point here is that both scenarios, I think actually gold could look pretty attractive. What do you think, Frank? And I'll come back to Ivan with the same concept.
Well, I think you're right, but I think the likely option we have here is, just based on what we've seen, is inflation is not going as quickly as we initially thought to the downside. So even though it is declining, I think it's likely to continue at least to the target where they're looking at 2%. I don't necessarily think that it's going to be a deflationary environment where we get inflation well under our target. I think once we get there, the Fed has been very transparent this whole time. I think that they're going to maintain that target, whether it's um, trending lower or higher. They're going to work to get it to that target and maintain there. That's why they're always talking about how it's not gonna it's gonna take a while for things to get back to normal.
Mm,
So even once we hit that target, that's still not the end. It's got to stay there, and
sure.
it's got to stay around there at least. So I think what we're gonna see is now that we're at the end of the year, we haven't seen any more hikes from the Fed. Um, Inflation is still coming down to where in the direction we want it to go. So we still have a ways to go there. But I'm pretty sure, just depending on what everything we've seen from CPI and different inflationary metrics, that we're going to hit that target probably next year.
Yep.
And I think it's going to stay there or around there, and that's going to be kind of a perfect environment for indices. At least gold will likely do its own thing, but
Hmm.
seeing that target inflation, and then the idea from investors' minds that like a year from now, 2 years from now, we're not going to see any hikes. That's going to be the prime motivator for bullishness on those things.
Sure. Yeah, good answer, Frank. And I think, this just reiterates to me with the S&P trade, which I know we both have. It is a trade for me because here's the thing. We don't know which scenario one or two is going to occur. And I should say that this is kind of also inflation, like the inflation war that we've been fighting with the Fed and watching those numbers. If that inflation number comes down, and as Frank, you're pointing out, it normalizes at a good range around 2%, and we get that soft landing environment where things are okay, growth is not destroyed, but we can kind of hover in that good range. Yeah, stocks are going to fly. But I don't know that that is going to happen, and none of us really truly do. So I think that that reiterates why it's a trade for me. Till the end of the year, I think that we're in this phase where inflation continues to come down, and we look good. But then next year is a question mark. Are we going to enter into, okay, now the economic growth is not stopping or it's not normalizing, it's continuing to drop. And in that case, that's why the S&P idea is still a trade for me, because I don't know what's going to happen there. And again, as I mentioned, in this scenario, I think gold longs are the play, and we'll watch out for that as we go into the new year. So that is going to be heavy on my mind. Ivan, what do you think? I mean, obviously, as I mentioned, economists get it wrong all the time, so we're not going to be able to know with certainty what's going to happen. But how do you kind of follow my thought process here? What do you think, and how do you play this from a trader's perspective?
Taking inflation one by one month at a time.
Mhm.
And look at the trend overall, because that's the proof in the pudding. Are we gonna have soft landing or not? Merca says that they have spent, or their record on credit cards. Is that spending going to end, or is it not? We also have been seeing inflation, at least earlier this year, falling, and then it paused in the summer fall. And to be honest with you, we just have to do like Fed. We are data dependent. We see how things goes, because if you take one pullback, one takeaway from this year is we didn't do a recession. But that was the major fear like 1 year ago. Oh, recession 2023. Oh, what's going on? We're gonna crash. We're gonna die.
Yeah, no, you're right, Ivan. That has been to the point that I was making about economists being wrong. This year, January, it was like the economists were screaming, this is the year of massive recession. You do not want to be in equities. Meanwhile, the NASDAQ is up 45% on the year. So again, this is why trading is hard. This is why investing is hard. This is why, people in the audience who have been here with us for a while, we are in here every day doing the work, because this stuff is inherently very difficult to predict. There is, conflicting viewpoints from the smartest and best traders in the world speaking on, panels all over the world. There's a reason why this stuff's hard. It's because markets are not that predictable. But I like your point, Ivan, and I'm with you totally. watch the trend that's unfolding in front of us. We are in this phase, and that is again why, reiterating my point with the S&P trade, it is a trade. It is not a, I'm just full blown, predicting that this is going to happen. Although this would be great for my idea, staying long indices and we get that soft landing. I think it's a good point. Be data dependent, as the Fed has said. We don't know. They don't know what's going to happen, so we can't assume we do either. So I like your point. I think that's really, really important. Take the new year when the new year gets here, and we'll be back on the streams covering it as always. So Ivan and Frank, thank you both for coming on. And as mentioned earlier by Ivan, he does coaching webinars within the group. If you would like to be in a smaller group setting where you can ask questions and work with someone who's been doing this for a long time, Ivan does that inside of our Discord community. If you would like to join that, it is our Black Friday sale going on right now. You can join by using the link in the chat right now. Sign up, shoot us a message. We'll get you set up with a membership inside of the group so you can learn with Ivan, learn with Frank and I. All three of us are inside of the Discord each and every day. And last thing I will say about that is you can also find Ivan's own YouTube channel, and you can send him a direct message on his own Telegrams, Discords, all that stuff if you're inside of the Discord as well. So he's got some one-on-one coaching webinars or mentorship programs that he also offers. Frank, Ivan, thank you both for being here. Again, we've got a busy couple months as we watch for this trend to either prove one way or the other. And of course, we'll be here for the audience to give them our takes. So thank you both for coming on.
Thanks.
All right. And now I think we're going to transition here to James is going to do the news with us in just a moment. But again, I hope that resonated with you guys. If that was helpful, I know it was not necessarily a bunch of charting here with that conversation that I had with Frank and Ivan, but if that was helpful to you, will you guys do me a quick favor and just let me know that it was by saying like, yes in the chat. If you just type a little quick yes like this, just drop it in the chat. Let me know that was useful to you. I try and get a read from the audience as to what you guys want to see more of from the streams and take it in that direction. So if that was helpful to you, just type yes in the chat. Let us know that it was informative in some way, form, or fashion. Again, I think Ivan's point about being month to month and data dependent, incredibly wise, and I'm definitely with him. It reiterates, as I mentioned, my concept with this trade that I have let run for almost a month now. It's been, I do not hold trades for that long. Usually a couple of days is like my average holding time, but this trade has just been so aggressively bullish, and I've continued to trail a stop. I'm actually, guys, if this level breaks, if we break through the highs, members inside of the group, I will be probably trailing a stop further. My next zone here is this level of support here on the lower time frames. So for those of you who are inside of our VIP group where I share trades being taken, you can see I was short oil. That didn't work out very well, but we've got some forex trades. The pound CAD trade is still running super hot, so that one became a monster runner. Still in that one, and still of course in the S&P trade. Any updates that I do these trades or new trades that I take will be shared inside of the Discord. Same with Frank and Ivan. You can see the two gentlemen who were just on the show with me. You can get access to all of our trades and insights by joining the VIP group. And just a reminder, it is currently 45% off. That's the biggest discount you're going to get anywhere across our platforms if you direct message us right now while we are live on the air. Thank you guys for the yeses in the chat. There was a lot of people who benefited from that. I appreciate that. And now we are going to hand it over to James for a few minutes to go through some really important market updates for you guys. He's going to take over the stream here for a minute and walk through that. I'll say hello to him. Hey, James, how's it going, man?
Hey, good. How are you?
Good. And I am excited to see what you've got here for us. I'm going to leave you to take over the stream for a few minutes, go through your news setup, and again, prep us for this very important week. It's, James, I mentioned this before you came on. It's a short week for a lot of the United States, U.S. people, because of course we've got Thanksgiving, which is going to be a wonderful, break from work and also from, an experience to spend time with family. But it also has a lot of implications, as it always does, on markets. And it's seasonally, as I mentioned to Frank and Ivan, seasonally, it's one of the best weeks of the year for stocks. It's really interesting. So this is it's an important week, and I'm going to leave it to you to go through a little bit of what you've got here prepped for us in terms of what to watch for with your News Now segment. So I'll leave you to it, and we'll be back with you soon.
Yeah, thank you. All right, so we've got a lot to look out for this week, like Nick said. Even though it is a bit of a shorter week here in the United States, but we can go ahead and run down a lot of what to look out for. It's a lot of international stuff for us U.S. based traders. There's a lot happening in Europe as well as Australia, a little bit of Canada stuff, and as always, usually a little bit of US stuff as well. But let's go ahead and dive right into it. So, first of all, today, none of these things have actually happened yet. This is all going to be happening later, especially this Australian news. This will be happening much later tonight on the East Coast of the United States for us. But the Bank of England's Governor Andrew Bailey is speaking, as well as the Reserve Bank of Australia's Governor Michelle Bullock is also speaking. So anytime the leader of the big financial institution, especially a national bank, is whenever the leader of a national bank is speaking, that definitely has the opportunity to cause some volatility when their currency. Where their currency is concerned. So not only are we getting the Reserve Bank of Australia's governor speaking, a little bit after that, they're going to do their monetary policy meeting minutes, where they give out a detailed report of their most recent interest rate decision, which can and cannot be. It can be market moving, but not always. So similar to the monetary policy meeting minutes happening today in Australia, tomorrow, the FOMC meeting minutes, which is the same thing, is going to be happening in the US. So again, could be market moving, could not be, but based on the last CPI report that came out lower than expected, this could be a very interesting meeting to pay attention to. Also on Tuesday, we have Canadian CPI numbers, so we'll get a new inflation report here out of Canada. And then on Wednesday, again, Reserve Bank of Australia governor is speaking. We have U.S. unemployment claims, as well as revised University of Michigan consumer sentiment. And then the Bank of Canada's governor, Tiff Macklem, is also speaking. Moving right along, Thursday, this is the national U.S. holiday, like Nick was just saying, Thanksgiving. So, U.S. markets and banks are going to be closed. But on Thursday, we have European flash services and flash manufacturing PMI numbers, as well as UK flash services and flash manufacturing PMI numbers. And then typically those US numbers actually come out after these on the same day. But again, because of the national holiday, those numbers are going to come out on Friday with the US flash service and flash manufacturing PMI numbers. So what's happening right now? So as you know, I reported this last week. Biden and Jinping met on Wednesday in San Francisco to talk about trade relations between the U.S. and China that have been kind of on the ropes recently. But it seemed like there was some decent reports that came out of that. So Xi and Biden met last week for the first time in a year on the sidelines of this year's Asian Pacific Economic Cooperation Leaders meeting in San Francisco. Joe Biden and Xi Jinping are working towards easing tensions between the world's top two economies. They have something like the relationship between China and the U.S. is something like a $700 billion trading relationship as the world's top two economies. So trading and working well with China actually has a lot of benefits for both countries, economically speaking. So they agreed to resume high-level military communication between the two countries that were stopped after the weather balloon incident. If you don't remember, a Chinese surveillance weather balloon kind of drifted, got lost, went over the U.S. It was a whole big deal. But between that and ex-House Speaker Nancy Pelosi's visit to Taiwan in August 2022, between those two incidents that have happened over the last year or so, tensions with China have been high. But again, Joe Biden and Xi Jinping met for the first time in over a year to kind of hash out some of this stuff. And again, it seemed like the reports were good and they're working together to ease some of those tensions. Xi wants to fix his economy, and part of that is continuing to work towards easing tensions with the U.S. So what else is happening with China? Chinese Foreign Minister Wang Yi welcomed diplomats from Saudi Arabia, Jordan, Egypt, the Palestinian Nation Authority, Indonesia, and the head of the Organization of Islamic cooperation for a 2-day visit in Beijing in order to discuss peace options. This is all, of course, between what's happening between Israel and Hamas and Gaza. The world, quote, must act urgently to find some resolution with the conflict in Gaza. Visiting ministers also voiced their opinions on that matter, with the Saudi Arabian Foreign Minister Prince Fazil bin Farhan Al Saud, I think I may have actually nailed that, saying, quote, the message is clear. The war must stop immediately. We must move to a ceasefire immediately, and the relief material and aid must enter immediately. End quote. So many world officials are nervous of conflict spreading past the borders of Israel and Gaza. They don't want this conflict to spread. Well, they don't want this conflict to continue anymore. That's first and foremost. But they also don't want it to spread into any neighboring countries and, continuing on this path of destruction that the world is very much against at the moment. And they would like to see this come to a ceasefire or some sort of peaceful resolution as quickly as possible. So it seemed like there was some good reports out of that meeting in China, where other foreign diplomats are trying to discuss how can we get aid to the people that need it and how can we get the fighting to stop as quickly as possible. What else is happening? Happy birthday, Joe Biden. Joe Biden turned 81 today, everybody. He's the oldest person to ever act as a U.S. president. 81 years old today, old Joey B. In slightly different news, unfortunately, Rosalind Carter passed away today at the age of 96. Rosalind Carter was First Lady Rosalind Carter, wife to President Jimmy Carter there. She was a mental health activist and humanitarian who worked her whole life doing whatever she could to help other people. If you know anything about the Carter family, one thing that nobody really disputes is that they were people who had big hearts for helping other people, not just in their nationally, but in their own community. They were absolutely humanitarian and activist type of people who wanted to leave a better mark on the world, and I think they did. So they did do that in a lot of ways, helping lots and lots of people throughout their long life. This is actually a picture of me and my family with the Carters. They are from Georgia, where, as you probably know, if you are familiar with the show, A1 Trading is based out of Georgia. So there we are with former President Jimmy Carter and First Lady Rosalind Carter. So rest in peace, Rosalind Carter. She was someone who worked very, very hard to impact a lot of lives and did a very good job doing so. So that's the news for today. Nick is leaving, so I think that we are going to wrap up. Maybe he's back. Okay, Nick gave me a thumbs up. All right, so I think that's going to be it. Thank you all for watching the stream today. Any last remarks, Nick?
Thanks for doing that, James. And again, as always, I think people really enjoy the news segments. Do you guys, let us know in the chat. Do you guys enjoy those little market updates from James? I know I certainly always like listening to it because it's like kind of like brought to us on a platter, like what's going on. You don't have to do so much research. You can just get the update from James. It's like another free service that A1's doing out here. So type yes in the chat if you like those. I certainly do. And James, thank you for coming on and for doing the news. I'll take it over for a few more minutes and then we'll close out the stream. So thanks for that, and we'll see you on the next one.
Yeah, sure. Sounds good. Thank you.
Okay. All right. And again, guys, I thought today's episode or today's show was pretty good. James, Frank, and Ivan all helping to contribute as we usually do. We have like a rotation of people who help to do these streams. If you guys enjoy them, make sure to hit that thumbs up button. Make sure to also subscribe. And with that said, last call on that Black Friday sale. We're doing it this week. Just a heads up, if you have not already messaged us for the 45% off, all you have to do is if you message us using the link in the chat right now, you can get 45% store-wide off of anything that we offer here at A1 Trading. We offer, of course, our coaching sessions, our signals from Frank, Ivan, and myself, and of course, a copy of the EDGEFINDER. Get it for 45% off right now if you message us while we are live. So as we close out the stream, if you're somebody who's been thinking about it for a while, I know a lot of people watch the streams and they haven't ever, purchased anything from us, but they've kind of always been like, hey, that stuff looks pretty cool. If that's you, just message us, ask us a few questions about it. We'd love to chat with you to see if it is right for you. We want to make sure that if we do sell you something, we want it to be something that actually is useful to you specifically. So that's why we have some reps in the office who can answer your questions about our software, our VIP, or anything else. With that said, I hope you have a wonderful rest of your day, and we'll see you back on the next show. See you guys.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.